Good afternoon, Scott Redler, T3 Live. Welcome to today's little early recap. I'm actually taping this at about 2 to 3. So when you watch this is not 4 o'clock, and a lot of things can change in the last hour. So not exactly sure where they will be. We'll, I guess we'll revisit that on Monday morning. But what I want to do is first also thank everyone who came to the meet and greet at Francis Tavern. It was great connecting with a lot of the T3 Live subscribers, everyone that's involved in the community. It's always great to put some faces with the names from the people in the chat room and, everyone who corresponds on the virtual trade floor. So, and also even, some of you that came from Twitter. So all in all, very, very nice night. And, hopefully we'll do another one soon. And you guys, if you didn't have the chance to come, you'll come. As far as the markets and as far as this week, to me, this was a very, I would say chopped up week. I came in long, some of the high beta names that acted really well last Friday, while the market was getting beat up down 185 points after that Thursday decline. And then we sort of got leg swept on that Monday. And then it's been a pretty, lethargic type week where you've had, little moves off the lows, but nothing really sustained. And then yesterday, we closed, pretty well, thinking that maybe we get a little bit of, of an oversold bounce or a reflex move to then walk in today, below the weekly lows, which never makes it easy for, active traders who are trying even to be tactical, or even looking for a day and a half trades. There were a few of them this week, but you had to be perfect and being the exact ones. So with that said, let's take a look at the S&P. Let's look where we are, heading into a huge weekend where there's going to be a lot of news. So first things first, I like to just show you in perspective the trend. This trend since November is still very, very intact. Not even near it, okay? And if you look at these, areas that every time we've topped out a little bit, you always have to measure it. I think this time was different because if you look at these last two times that we topped out, I feel like we caught a nice short because we were ready for it. You look here, you had that May 22nd outside day, then it wedged, and then I remember when we broke below 1640, a lot of us put on some puts or whatnot, then it came up, retested, and worked its way all the way lower to the fact where you almost had a small breakout failure here, which gave us some clues also that this time that 50-day wouldn't hold to give you that last move. And then from there, very nice tradable move. And then if you recall over the summer, even this one, I think we caught pretty well, okay, when you had that false little breakout here. Then within this little area, we started drawing the head and shoulders top. And then right on this day when we closed in the lows, the virtual trade floor saw me put on some puts. Some people were short. And we caught ourselves a nice move down to then what happened. We held the trend and we broke this descending channel here and we had a nice move. So in this move, if you remember, it was like 13 out of 14 green days, one little red day. I think that was it right there. And then, Fed did nothing, which threw a lot of people, in a loop or so to speak. And you had this real quickly breakout failure. So I don't think, if you did, congratulations. I don't think, anyone really caught this, okay? And again, and then coming in on Monday morning, you had that. So you had 3 quick down days, 30 handles off the highs that I think, unless you were, rolling up shorts and you stayed with it, that means you had an opinion anyway, but whatever, it was hard to catch. So you come into this week and you see that, it's been a grinding week with, there were some small little red dog reversals along the way or some small, areas to try and, buy a dip here, but every time it just bounced and you added to it, you lost. And then yesterday we closed, pretty well thinking maybe, we get a bounce back into the weekend with end of the month and, some mutual funds actually ending their year. And then we walked in today and, this is where it was. So with that being said, not a very easy week at all. Here's your spiders right now, so basically we're at 168.79 and, but, on the outside though, without trading the spiders, which I focused, I think, a little bit too much on them this week, because that's what I tend to do after a 30 or 40 handle move lower. I like to be able to try and find an area to take out 2-3 points in the spiders, but basically they gave us, 30 to 60 cents and you had to be a surgeon to do it. But a lot of the leaders acted very well, even in the midst of this, whatever, 40 handle move off the highs. You look at Tesla, still looks really good. Trending higher. We talk about this so many times, and the reason why we talk about it, because this actually trades in trends, follows rules, moves well when it breaks above areas. This was the last time I think we posted the chart for an additional move, and there you go, there you have it, and it actually looks okay today too, but not much power because there's not much power in the market. Facebook's been unbelievable, unbelievable move starting from the gap up after earnings. A lot of calculated points too. This was a calculated buy. You had one here and here, and now it's somewhat of a runaway train. I know for me, I think I stopped really. My last entry was right around here, and I held it into this. And then Monday, I got rid of it because I was like, you know what? The market looks a little topsy-turvy. And then what did it do? It held up and had a really nice week. If you've been shorting this thing, okay, there was no reason to short it. Okay, never said short me. You had two little clues here. One, when it broke below the 8-day, maybe you were short that day, but then it reclaimed it, and you just had to say, okay, it's not ready yet. And then, this upgrade, remember this? Upgrade or the China censorship opened up, sold it down on the lows, and some people might have went out short that day. So these were the 2 days, but then there were traps. Next day, it opened up around here, and then you had to get out of the way. And if you did, you saved yourself some money and pain and brain power. Bottom line, it's been following the 8-day. It's a little extended, so I don't think you can go chase it, but sometimes it doesn't mean it's just a short. LinkedIn, unfortunately, a lot of us got a little bit in trouble in this morning. Nothing you can really do about it. It looked really good. It bottom-tailed here, gave you a nice day, inside day, then broke out. So again, with the close yesterday, looking decent, this could have been one of your stocks, if you had a few stocks on. And then for some of, on my desk, they came in long it, and unfortunate. It's unfortunate that happened. Okay, and there's nothing you can really do about it. You just say, okay, I'm going to trade on my time frame. If I'm an investor, you've seen that many different times, and you've been holding through, and you've had an unbelievable move. So it's just a bunch of noise. If you're a trader, you have to say, okay, you know what? I don't know if I'm going to sit through this. I don't know if I'm going to sit through it. For what could happen this weekend, and you take your lickings, and hopefully it resets up, and you can get it again. As far as as we're going through social networking, Zynga has been moving better. Okay, we talked about Zynga right here. That was a really nice trade. This was another one. Then yesterday it engulfed it, but now today's right back up. For some of you that have this in the drawer, I still think at some point 2014 this gap gets filled, probably even sooner than later into the 4s. Anyway, as far as some other high beta tech names, there's like divergences amongst all of them. Google, we came in long Monday, or at least I did, and thinking that it looked good, and then I got stopped out that day. But you know what? Looks pretty good now. Get stopped at 895, much better than holding your nose going underwater and and dealing with it for 20 more points. So losses are unfortunate, but they do happen in our business. And you came in on Monday, this looked really good, right? And then what happened? It changed on that. Boom. So that told me it's not going to be heading to the 2013 highs real quick, so I got out of it. Then you could have even got out of it, right around this 881. And now if you didn't, you're thinking about what to do here. Some people are trying it today. Okay, if you got out here and you want to try here and you say, okay, it's a higher low, maybe it's a little red dog reversal, say if we close strong, it's worth a chance, especially if you're looking for a new entry in Google, because if just say I sold out here and I don't get back in this, okay, and then it makes new highs, how do you feel if you're a swing trader? Okay, all in all, though, this channel's big. It's absorbing what's been a really big move. So, again, as an investor, nothing truly to worry about. As an active trader on your P&L, getting paid every month, maybe you revisit and wait. Amazon actually acted better out of a lot of these. Okay, it's holding above the prior breakout high. This was the last time we really got excited. In the last 2 weeks at 302, boom. So now it's holding in there, but again, with the market being weak, it's hard to stay in things because, like we saw Monday, leg sweeps happen quick. So, but all in all, this one looks okay. It'll be on the watch list for next week. Netflix, also remember that we started the week, they got an Emmy, and boom, it opened up and then engulfed it. And a lot of people tried getting short the day after for it to break this, and it held. And now it looks like it's still just hugging the 8-day and a little lethargic, but this trend is still strong. This has been a really nice vehicle too. Broke out here, broke out there. And then there's been some trades along the way, but ultimately this trend is still intact. And the financials have been really the weight on the market. We talked about that early in the week when the XLF did not make new highs. So at least that gave us a dose of skepticism not to be all in long when the market was breaking out on Fed day or the day or two after it. So you could always look at signs to help you make some decisions. And right here, that was the high that we never broke through. Came down quick, and now it's hugging this area. Okay, so at this point, I would say if the financials stay strong today, maybe the market holds in there. If the financials fade again, it could see a move to this trend line, and that would definitely continue to put some of the weakness on the rest of the market. If you remember a day or so ago, we caught a really nice trade in JP Morgan at that 50-30 area. So that's the kind of things I've been looking for this week, because I don't know exactly, what I think is next in the market, so I'm going to just look for some trades. And if you look here, this was that 80-20 trade, day and a half move. Since I was only looking for day and a half moves, that was my selling spot. And today, if you sold it there, some guys got in. It's actually looking strong today. So maybe, if you watch this now or within the last few minutes, watch JP Morgan. If JP Morgan were to get stronger, maybe that helps, lift the market into the close. Overall, you do still have this macro head and shoulders pattern with the neckline that it held. Now it's going to have to really, do a little sideways work, some commitment to this area to then perhaps, go again. So if we were to break this downtrend and close above 54, that would negate this pattern here, which would be nice for the market. Goldman Sachs has been very weak ever since it got added to the Dow. This was a nutty move. It's just been bleeding lower, and with every day it tries to bounce but can't, and it still seems heavy. And right here, as of like 5 after 3, it's still looking weak. See how that, if this doesn't bounce, it's going to be hard for the market to bounce also. Let's go back to the spider, see where that's at. Spider's still right around here, 168.75, looking like nobody wants to make big bets into this weekend. A lot of people think no matter what, a deal is going to happen, but you always have to think, what if it doesn't? We're only at the 50-day. The last two breakout failures went to the trend line. The trend line comes up higher. So no trader wants to start too early, but also, if you don't have much long exposure, we just came off 40 handles and there hasn't been that many opportunities to buy the dip. So that's why, you see the conundrum and you hear some frustration on the floor, because it's not the easiest scenario to deal with. And ever since the Fed came out with their news last week, I think a lot of traders, I talked about it with Keith McCullough yesterday, not sure what to trust or what way to go about it. Good news was good news for a while, and the market was getting used to rates higher, and then they took QE, no QE off the table, and now people are like, okay, what do we want to hear here? And now when we start getting good reports again, like maybe next Friday the jobs report, then is it going to be October for the start of December? So how do you put together, your package of stocks if it's going to be essential for that when you're not even sure which way the market's going to react to it because it's flipped sides so many times? Well, anyway, another stock we'll probably look at next week is Apple. Apple is, trying to stay relevant, trying to hold in there. It's definitely a frustrating stock lately. It's done a lot of gaps and not a lot of intraday action. This is that, lower consolidation phase. This is when it actually made a lot of sense. It was great, broke above the downtrend, had a quick move, pulled back. This is when it broke above the 200-day. And then ever since, it's been a gappy mess. And now as we speak, it looks like it's coming in. There's a tweet out there that Icon's having dinner with Tim Cook Monday. So if you want to take it home long into the weekend because of that, just realize that, then you're taking that risk. So good. But also, if you don't want to take it into it and it goes up, then you can't be upset if it happens without you. But overall, still hanging by a thread. I would have liked better action the last few sessions, but it hasn't happened. It's filling this gap right now. Here's your next big level there, and hopefully they'll give us an intraday trade so you don't have to worry about taking it over the weekend with Washington news potential and I guess maybe even more iPhone news potential. So, again, just adds to the complications of what's going on in this tape. Recently, gold had a little bit of a bounce, and that's been really random as well. Gold we'll watch next week, and you'll see here it still looks, obviously the macro downtrend is still intact, from here, then the break here and the break here. But now, there's some people talking that this could be an inverted head and shoulders pattern where you have the left shoulder, the head, here being the right shoulder. And I guess you could draw the neckline kind of coming like this. So really for the bugs or people who have a thesis on gold to start getting excited, you have a few obstacles. This is one of them, to get back above the high from the Fed day, okay? And then to break above, this downtrend. Okay, and then maybe gold can get you some follow through. Right now, it's just a tricky trade. Whereas yesterday, gold was, down a percent after being up a percent, and then gapped up. So you had to buy into the weakness for a gap. It's very gappy, and it's not the easiest thing. So I'll be honest with you. September was a tough month. Okay, where you have, 13 out of 14 up days, and then you have 6 out of 7 down days in a row. Not much continuity, a lot of different divergences. One thing that's been constant, though, it has been the leadership. Okay, it's been strong, and those stocks that followed the 8 and 21 day have had some decent moves if they stayed in, in those trends, which we go over them all the time. The banks were weak. You had a lot of different, divergences amongst retail. Within retail yesterday was a disaster for people, and I feel bad. There's nothing you could do about it. Sue JCPenney's or whatever. I think there'll probably be a big class action lawsuit there because they came out, said all this news about JCPenney's, and then it closed, at 10:40, but they forgot to say one thing very important, that they were raising money. And so if you felt comfortable taking it home based on that news, you just got sideswiped. Okay, everyone thought this could be a potential bottom after what has been a horrendous trend to the downside with a lot of people getting hurt. Look at this move, geez. To then finally thinking, okay, maybe it's over, maybe this move just exhausted itself, and then boom, they announced, like the CEO came out to assure everyone that everything is great, that trends are moving along, but let's save the money raised, the most important part, for after the close, after you get everybody in, and it closed, where to close at 10:42 to now be at 9. So if you did buy it on that, you know what, it's a broken trade. It happens. It might happen to you again. There's not much you could do about it, except I guess cry about it. That helps sometimes. No, just don't cry about it. It's part of the business. It is what it is. Same way if you went home long LinkedIn, thinking we're going to have an up day, and then there was, a downgrade and it was down 7. Sometimes, you do the right trade, and if something happens that you don't expect, then you figure out how to salvage it, lose a little less, and move on. I think even with JCPenney, this morning it went back to 950, so you could have salvaged something before it going back below 9, which is a decent percentage. So with all that said, you could always salvage trades. You could always work on your process. You could always miss something and revisit. Just don't chase. Right now I saw people saying, I'm, now buying Facebook. I'm like, you're buying Facebook now? You missed 7 entries since earnings, and now you're buying it. The same way though, if you started shorting it 3 or 4 points ago, saying I can't go up anymore, okay, that's also an opinion. So the most successful people out there are traders. Do not use opinions. They trade what they see, not what they think. That's a smart term I've heard from people out there. I don't know who exactly. If I'm quoting you, I'm sorry for not earmarking it. But anyways, this is one of those weeks. One of those weeks where if you felt like you had a date with Edward Scissorhands getting all paper cutted up, it is what it is. At least you're not with limbs on the floor gushing and not being able to repair yourself to get yourself together for next week. So paper cuts happen. Levels versus levels happen, but at least you have a plan and a process and you stick to it. So we'll see what happens this weekend. Hopefully dysfunctional Washington could do something, to work for their constituents versus their own pocketbook, and make us not look as bad on the world stage as they've been doing ever since Labor Day, when Labor Day, I'm not even going to get into what happened with the whole Syria mess. It just feels like it's been a circus of headlines, and traders hate when there's a circus of headlines because things get pushed around and trades change, and it's hard to trust things. So until we get more clarity, until we see new trends develop, I would stay tactical, and we'll figure it out and keep it simple. So with that said, we do have something for you to look forward to next week. We have a webinar, okay, with Dan Darrow on how to trade options around earnings, and we're going to be going into earnings season soon. So I hate to take stocks into earnings, which everyone knows, because anything could happen. So, but if you have an idea, at least if you go with options, risk is premium paid, and he's been doing this a long time, and he wants to share some things that have made him successful with you prior to earnings season. So make sure you tune in to the webinar. Go to the front page of our website, t3live.com, and you'll find out how to enter it. Have a great weekend. Scott Redler, T3 Live. See you Monday morning.